So is life insurance a scam? The answer to that probably depends on your perspective. Well, we probably wouldn't be building our business in this industry if it was. Let me tell you a story. From the mid-1980s through the 90s, interest rates were real high. We're talking a pretty reliable 12, 13%. And the hot product at the time were called interest-sensitive life policies, which were basically a variation of universal life. In short, the way these policies work, that you pay a premium, and that premium over time is supposed to cover both your expenses to be covered and also collecting a cash account that receives an interest rate. Now, in order for agents and companies to determine how much your premium was going to be, obviously your health, age, and the size of the contract would be calculated, but also in that calculation would include the assumed interest rate that you would be getting. The more interest you were projected to get on these policies, the smaller the premium was assumed you needed to pay. Because, of course, more money is going into the policy as compounded interest, which means you have to put in less as premium to cover your cost to be covered. This all worked pretty great until the mid-2000s financial crisis, Great Recession. All of a sudden, the Fed set market rates near zero, and through successive rounds of quantitative easing, pretty much kept them there for decades up until now. This means all the interest that was assumed was going to be credited to the account from the early 80s and 90s is now cut down to a bare minimum. This happened right at the same time where many of the people who had their policy for 20, 30 years were now older, and their cost of insurance had grown as it was always planned to do so. And this was always how the policies worked, but unfortunately this wasn't explained to many clients because really many advisors didn't know this either. And so when the high interest rates stopped, all of a sudden these policies weren't being funded well enough. Clients were still paying the same premiums they've always paid, which again were planned based on the assumption of much higher rates. In the preceding years, millions of people started getting lapse letters telling them that the policies they were sold that were supposed to have thousands of dollars in them were now underfunded and at risk of lapse. But the only way to keep them was to funnel several thousands of dollars, try and make up for all that lost interest. Most people, of course, could not afford to do that, so many people lost their coverage as a result. Because that cost of insurance had eaten up most of the cash value trying to keep the policy alive, in most cases they got very little back for it. Now, if you were one of those people, you might think life insurance is a scam. But the fact is, had these people been explained the nature of these policies well before crisis took hold, they likely would have been able to make adjustments to keep it. So the blame is first and foremost on the misinformed and ignorant advisors that sold them these plans. But also the policyholders of these plans did get annual statements every year. It would be a detailed ledger of what was going in and what was coming out and if there was a shortage. Fortunately, many people ignore the statements that come from their insurance companies. The fact is, had they read them or had the advisors at the time done their due diligence, there'd be far less people right now thinking life insurance was a scam. Now, over the decade or so that I've been in this industry, I've had the unique opportunity of delivering sometimes several hundred thousands or millions of dollars to a grieving family in their time of need, all because of a well-planned policy that they were paying $75 a month for. And to date, I've never had anybody take that check and then tell me they believe it was a scam.